Hello, and welcome to today's Bear Tracks Report. It's been a while since we've looked at, on YouTube at least, the weakest stocks in the market, but given the fact that September is seasonally the weakest month out of the year, I feel like this is as good of time as any to talk through some of the weakest stocks in the entire market. If this is your first time listening to the Bear Tracks Report, I want you to understand that the stock market can go up or down, but more importantly, individual stocks can go up or down more than the market. So that's what we're focused on. We're looking at laggards on an absolute and a relative basis. We're looking at things with meat on the bones, right? So we're looking at things that are typically not going to be micro or small caps. We had some liquidity filters. We want to make sure that they're pressing into those 52-week lows. And what we get from that is a list of tradable names that are showing incredible weakness. And when the market starts to pull back, particularly in bear markets, we really want to be short these specific names because these have the highest chance of overperforming to the downside. First things first, I want you to understand that none of these stocks are necessarily ready to be shorted right away, right? We're in a primary uptrend. We're still in a bull market. So if you're looking to take some stock short, be opportunistic with these, right? You're still trading against primary trend here if you're looking to go short. But yes, there are some opportunities on this list that we're going to go through. First thing that I noticed when I looked at this was the significance of the energy related names. And that's where I want to start before we even get into the list is I want to pop on over to TradingView. I just want to, talk through really quick that the energy sector had a lot of really good opportunities from the bottom in 2020 all the way up to about the middle of 2022. We traded the energy sector multiple times. It had given us some incredible trades. We traded Chevron up into all-time highs, like a 2,000 to 3,000% winner back in 2021 and into 2022, like end of 2021 into 2022, et cetera. So we've been trading energy, but over the last probably year and a half, energy has peaked out. And the last time we really tried to trade energy was back here in March, and it just fizzled out. So energy has really been the lagging sector throughout this bull market. We have utilities sitting at all-time highs, right? Staples, materials, industrials, healthcare, all these different sectors at all-time highs, and energy, for whatever reason, is just not participating. And oil, for what it's worth, also doesn't look like it wants to participate and head higher. And obviously, there's some correlation there between energy stocks and the price of oil. As a matter of fact, as of right now, the energy sector is the only sector trading below its 200-day moving average. While it is still slightly sloped to the upside, you can see massive consolidation here. And, to be quite honest with you, I expect this to break to the upside and start participating, but every time we've looked to enter, it just hasn't worked. So since that March opportunity, we have not entered any energy-related plays, and therefore we've avoided all of the uncomfortableness of owning these energy stocks through chop, right? Within a bearish momentum regime, just not things we want to be long. But going back to the Bear Tracks report, if we look at actually what is on this report, there are a lot of energy names. And this kind of surprised me a little bit. And they're not small energy related names. These are large companies. Number one is Occidental Petroleum Corporation, right? We're sitting right at those 52-week lows, large market cap. And for those of you that don't know, this is Warren Buffett's stock out of Berkshire. Yes, Berkshire has been accumulating OXY all the way back at the end of 2021, beginning of 2022. This is famously known as the Berkshire bid. Anywhere around $60, Berkshire hops on, and they've been accruing a large percentage of the company. But we're now topping. This is a topping pattern, guys. Do we undercut this, use bears as liquidity, and then rip it right back up? Does Berkshire continue to sit on the bid? We absolutely could. But from a technical standpoint, this is a topping pattern that is now breaking down into a low volume node. This is our bread and butter setup when we're looking to short. When we want to short things, we look for long ranges with established support levels with a low volume node or an all-time low that increases the odds of a capitulation. And that's exactly what this is. So the exact opposite type of setup emerges when we're looking to short. When we're looking along, we want stocks above the 200-day moving average and the 200-day moving average sloping up. Well, now we have a stock below the 200-day moving average and the 200-day moving average is sloped down. So that's step number one. Step number two, we want stocks trending below the 50 RSI in a bearish momentum regime. And we've been in there since about April. For whatever reason, every time bulls try to step up, bears continue to kick their ass and continues to depress the price. And now we have that support level breakdown, which is our last little telltale sign that this looks like we want to head down. So I drew a basic fib extension on there just to get a general idea of what type of risk we could be looking to put into the market if we wanted to short OXY, and it lines up perfectly with the previous little oscillation high, and so I like that, right? Short this OXY, Occidental Petroleum Corporation, sub $56, target 43 overall. Expect to find some support there. And we'll see how far this thing actually goes. This is a picture-perfect short setup. Other than the fact that Berkshire owns a significant portion of this stock now, there's really nothing here from a technical standpoint that makes me want to say we need to own this stock. This is a terrible-looking stock, to be quite honest with you. And as a matter of fact, if you go out onto the chain, lots of volume on both the calls and put sides. So people are fighting right now. They don't know which way they want to take this. The market looks like it doesn't know which way is going to work. But from a technical standpoint, this is a classic topping pattern into new lows, right? So we're targeting once again 43 off the 56 level break. If you're looking for a good entry here, I would wait for a potential pullback up towards that 56, short here, and then look for the continued move to the downside. This is all, once again, the backdrop of the energy weakness in particular, right? Energy needs to be underperforming for this stuff to work, and it is and has been. The next one down that I want to point out is another energy-related name, HES, Hess Corporation. Once again, pressing into those 52-week lows. This is incredibly important for what we're looking for, right? So let's go over to TradingView. You're going to notice that a lot of these topping patterns look relatively the same because they're all within the same industry and sector group, right? HES is another one that looks relatively the same as OXY, but this one doesn't have the benefit of Buffett and Berkshire sitting on the bid. So just draw it with me. It doesn't have to be any harder than this. Is that a rounded top? Potentially. Where's the horizontal level? Is there an opportunity here to short this down towards potentially $100? Yeah, I think there is. Once again, you're coming off of, is that an accumulation or a distribution? This looks like a distribution phase, which is not what bulls in the energy sector want to see. We want to see these things resolving higher. And as of right now, with OXY starting to roll over, HES starting to roll over, these look like distribution phases that might start little stage 3 downtrends, or stage 4 downtrends, excuse me. This is your stage 3 distribution. $100, probably the right type of price target. Once again, you could draw some fibs just to get a general idea of where that price target is. And the 1.618 puts us at around 105. Lots of volume on the chain if you want to take this short. Not financial advice, but I probably wouldn't want to short multiple energy-related companies. They're all within the same sector. They all generally move relatively the same, at least when you get up in the market cap that we're working with right now. So if you like one of these setups better than the other, I would probably just choose one. And I would be a little bit more aggressive with the short than probably conservative because, once again, we're still in a primary uptrend, right? We're still in a bull market. So we're not in a bear market. It's unreasonable to expect these things to drop 50%. Maybe they do, but it's just unreasonable to expect it. So if you're looking to take these shorts, be reasonable with the contracts that you're looking to buy, or if you're looking to short commons, that's fine too. Continuing down the list, lots of different companies here, not all of them set up for shorts. Albertsons, for whatever reason, we have that conversation internally all the time. The consumer supposedly sucks, but you have Walmart and Costco at all-time highs, and then you have other names like Dollar Tree, and Dollar General, which are down at 52-week lows. But you have Albertsons, which is another retailer that's down there near those 52-week lows, just a choppy chart. Things are not working across the board, right? You have names that are leading and you have names that are lagging, and those laggers are lagging a lot. Next one down I really want to talk through, though, which arguably I think is the most important stock on this list, is Chevron. Chevron is the most important stock on this list, and it's arguably the most second important stock within the energy sector, with Exxon being number one. We've been looking at Chevron for a while, not to go long. Does this look like a massive distribution phase? To me, it does. You know, if we delete the arrow, because I was trying to explain that this is a downtrend, I'm sure everyone can see it. This is a rounded top with a horizontal level. Now, nothing is guaranteed when you're trading, right? Nothing is guaranteed. I can't tell you 100% sure anything's going to happen other than you're going to have to pay taxes whether you win or you fucking lose. But we're trading below the 200-day moving average. It is sloped neutrally, so a little bit better of an edge if we wait for that to start sloping to the downside. But we're now trending below the 50 RSI in the beginning of a bearish momentum regime. We're pressing into that 2-year plus support range. And there's an opportunity on a high volume node breakdown to the 118 level. That doesn't seem like that big of a drop, but when you look at how much that actually equates to in market cap, 16% drop is a tradable short, particularly if you're swing trading. Lots of liquidity on the chain here. Lots of volume on the chain here. Those Octobers look fantastic. And once again, this is the backdrop of XLE showing weakness. This is, I believe, the second largest holding within the energy sector, which is such a stark comparison to Exxon, which is hanging out near all-time highs. So for whatever reason, and you can see the previous little trade idea we had here, which didn't work. We abandoned it very quickly and didn't get long energy again. But Exxon had an opportunity to break out into all-time high just a couple of months ago, failed, still sitting here consolidating underneath all-time high, and for whatever reason, the market is selling off Chevron into 52-week lows. Why? I don't know. It's not up for me to decide. I'm not smart enough. But I do understand I don't want to go long names in downtrends. And potentially these support breaks give us opportunities to short. Once again, you're in a primary uptrend, so be very careful if you're looking to short these things. Do not be so outrageous that you expect 50% drawdowns on these types of stocks. But yes, there's an opportunity here to short Chevron sub 140. Price target ultimately down there at 118. This checks the P's and Q's. The last stock I want to talk through, and guys, there's a lot of stocks on this list, but there's not a lot of setups on this list. Does that make sense? Not everything is going to be a tradable name, even if it's weak, just like not everything is going to be a tradable name if it's strong. You have to have a clearly defined risk level so you know where to cut if it doesn't work. Very, very important from a short standpoint because, listen, once again, primary uptrends, lots of shorts are not going to work because the general flow of capital is positive for the market. That's how this stuff works. Shorts are less efficient when the market is in a primary uptrend, and lo and behold, longs are less efficient when the primary trend is down in the broader market. So, last one I want to talk through here is Boeing. Not necessarily because I think Boeing is a fantastic short here, at least yet, but there's an opportunity to continue to short Boeing. You can see that we were actually looking at potentially taking Boeing above the 268 to 270 range. We never got up there, so we never took it. Once again, these levels that you set don't have to be just like mine. But lines in the sand will keep you in the game for a decade plus, right? I've been doing this for 14 and a half years now because I'm not willing to take trades early. I don't get excited about front-running things unless there's like an A-plus setup. And I also don't hold losers until my account blows up. I just draw a line in the sand. Some people are not going to agree with that line in the sand, and that's totally okay, but it keeps me in the game when I'm wrong. Boeing, for example, we wanted to be long above that 268, 270, never got there. We didn't take it. Totally fine. But now we're finding ourselves into 52-week lows. For those of you that are classical technical traders, this is just a rounded bottom in an intermediate downtrend. Once again, you're trading below a downward sloping 200-day moving average. You're within a bearish momentum regime for the entire year. This is a very bad looking chart, very anemic. Follow the volume to the downside, or is a reasonable expectation for Boeing to find support, probably the 145 to 140 area. Draw a line in the sand and say, listen, if we break below 160, I'm targeting 140. Does it clear the 10% move? Does. So it's worth an opportunity. For those of you that are swing trading, might not be the best opportunity to swing trade short setups that are less than 10%. There's just not enough meat to make it worth the risk. Because once again, you're trading against primary trend here. But if there's a double-digit return potentially from a profit target and entry standpoint, yeah, if you want to throw a couple bucks on it and you think it's going to continue to go down, especially with the broader market right now, in September being a classically weak month, there might be an opportunity here to take Boeing for a quick move to the downside through this kind of low volume node here. Absolutely. So once again, we're not shorting tech stocks. None of these are higher beta stocks. These are stocks that have meandered for a while and are starting to break down. Obviously, Boeing has been range bound since 2020. We haven't really made any significant progress up or down. Chevron is breaking down from a potential 2+ year high. Occidental, 2+ year high. HES, 2+ year high. And Boeing's in here with an intermediate to short-term downtrend here with a breakdown, this rounded top. These are tradable events if you want to take them. There's no pressure if you don't want to short a market, particularly in a bull market. I understand. I typically don't short either. But if you're looking at throwing some exposure into the market to the downside, potentially as a hedge, right? Maybe your portfolio is net long. You don't have hedges on the books. You're looking for individually weak stocks. Maybe add some shorts on there. So if the longs start to come down a little bit, you'll make a couple bucks on those short setups. There's 4 off the top of my head that look pretty good. So once again, showing you guys the Bear Tracks report. If you want to take a screenshot, feel free. If you're inside of TTI, the report's going out right after lunch with the trade setups and the options contract set. OXY, HES, CVX, and Boeing. Those are the 4 that I like right now to the downside. All right, that's what I got for you for the Bear Tracks. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Sign up for the free email newsletter. Unsubscribe if you don't find it valuable, but most people do. I send out invitations to free webinars and these reports almost on a daily basis. I appreciate you guys for hanging out with me. Enjoy the rest of your Thursday and enjoy motherfucking football tonight. See you guys.